Hello, everyone. I'm Dan Fritzen, Managing Director at McCarville Capital Partners and a longtime volunteer with the Asset Owner Series. I wanted to thank you all for joining us for today's program, How to Close the Remaining Gaps in ESG Mandates for Asset Owners. A very big topic, of course. I would like to thank my good friend Tom Brigandy for spearheading the AOS, as well as all the staff and volunteer at CFA Society of New York who make these events possible. We are most happy to welcome Hubert Danzo to moderate today's panel. Hubert is the CEO and Chairman of Africa Investor, as well as the Chair of the Asset Owner Series Advisory Council. Without further ado, here's Hubert.
Thank you very much for that introduction, Daniel. On behalf of the CFA Asset Owners Council, which I chair, it's a real pleasure to welcome you to this Asset Owners Series dialogue on how to close the remaining gaps in ESG mandates for asset owners. As mentioned, my name is Hubert Danzo, and I will chair this roundtable dialogue today. The event is organized with support from CFA Society Seattle and brings together thought leaders from the global asset owner community with funds of all different kinds of sizes to really unpack and explain what they think is missing from the ESG investment mandate options. Our authoritative and accomplished speakers will discuss how asset owners and investment advisors can optimize the implementation of their mandates and monitor their impact, particularly through model ESG mandates and contract language developed by the Pension Fund Coalition for Inclusive Capitalism as key tools for empowering pension fund managers to better direct asset managers in line with their ESG priorities. Our speakers will also take a look forward in terms of how to look at mandates and how the mandate landscape will likely change. We'll also touch on the key future drivers of ESG from an asset owner's perspective in particular. The panel will also discuss what else is needed between asset owners and their managers, investment advisors, or the market to address ESG through engagement, value creation, and innovation. And to take us through this roundtable dialogue, I'm joined by my authoritative and distinguished friends and panelists, namely Lynn Forrester de Rothschild, who is the founder of the Coalition for Inclusive Capitalism, Hiro Mizuno, who is the former Executive Management Director and CIO at the Government Pensions Investment Fund of Japan, GPIF. We also have Leola Ross, who is the Deputy CIO and Head of ESG at Seattle City Employers Retirement System, SERS. And last but by no means least, our good friend Teresa Whitmarsh, who is the former Executive Director from Washington State Investment Board. And to get us going, I'm going to turn to my good friend Hiro Mizuno, where we caught up for a chat earlier at a better sort of time of the day for him and delved into his vision on how to close the remaining gaps in ESG mandates for asset owners. We also looked at universal owner-related issues and the timeliness and the importance of deeper asset owner industry collaboration. So over to you, Hiro. Hiro, while you were leading GPIF, tell us how you first came up with the concept of how asset owners can use ESG investment mandates and manager relationships to establish ESG investment parameters.
Yeah, when I was running the Government Pension Investment Fund, as known as GPIF, we really worked hard to make the ESG is a core of our investment strategy and an investment, decision making, and given the GPIF outsourced most of the equity portfolio to external money managers, we really trying to find out what's the best way, how to communicate our seriousness and our belief in ESG integration. And the second, we need to make it clear that the asset managers have their own plan how to integrate ESG into their portfolio management. And then we just need to find the reporting process so that the GPL will be confident and also the very convinced that our asset managers is doing the work, not only managing the portfolio to make the best financial return, but to make it clear that to deliver financial return, we demanded our asset managers to clearly integrate ESG factors. So to do that, we started with having the very close and the very, very, the detailed conversation with the asset managers, how they can do it. And we started monitoring them on a quarterly basis, how they do that. And we continue to demand more reporting to the GPIF from the asset managers, how they integrate ESG, and also how they engage with the portfolio companies, management to promote the sustainability and etc. And then in the end, we always struggle that how to make it contractual between the GPIF and asset manager, to make it the contractual obligation of the asset managers to integrate ESG. And that one, we found it really difficult because to be honest, nobody else really tried that. So and also the asset manager struggled because the GPIF was not very clear at the beginning what we are expecting from them, because we are one of the leaders, kind of like one of the pioneers trying to promote the ESG in the external asset manager relationship. So we are not very clear, and the manager is not very clear. So they are really hesitant to put that in a contract. But the harder and the more closely we work with the asset managers, and as you saw that over the last 5 years, ESG became one of the major, topics and major factors for any asset manager to integrate for their portfolio management. So I think the time is now maturing, and the asset manager will be happy to make a contractual agreement with their clients. In this case, the GPIF or the other pension fund managers to integrate and monitor and report ESG to their clients.
How do you see the role of ESG mandates evolving amid the challenges you've just outlined?
I think throughout the time, we try to agree with the asset managers, which are the financially, the relevant and financially material, the ESG factors for them to use for their investment analysis and decision making. And again, it was not easy at the beginning, except for the climate change. Or to be honest, some of the asset managers didn't even agree that the climate change is that relevant at that time. But over the years, I think nobody is now arguing climate change is the critical material factors. But when you look at the other, the factors like the social factors and the governance factors, there's still some like a disagreement, like which is more, the material or like relevant for financial, the analysis and decision making. So this kind of like, the agreeing at the beginning, how we expect the asset managers to manage our money is very, very important. So rather than trying to, navigate the portfolio decision making from throughout the investment chain, from asset owner to asset manager to the portfolio company, it's much better to put that in a contract or mandate. So, I think the work made by, this team, Pension Fund Coalition, is going to help the particularly less resource asset owners or the pension fund managers to, to get to the table with the asset managers to talk through their belief in the ESG, and also how they, what they expect out of their portfolio asset managers in terms of the ESG promotion and ESG integration.
Do you think that larger asset owners will benefit from this more than smaller asset owners? And what about those who manage more of their assets in-house?
Well, GPIF is very unique, which is the largest pension fund in the world. But they were regulated to outsource the equity portfolio to external asset managers. So for GPIF, it's very critical how to manage the relationship with the asset managers. And the ultimate, the most effective way to manage the asset managers' mandate is to put what we expect in a contract. But even with the clout of largest pension fund in the world, we are not very successful, with getting asset manager agree to put that in a contract. To some extent, I can sympathize that the asset manager is really hesitant to put that in a contract because as I said, like 5 years ago, it was not very clear to anybody in our industry that what the ESG really means. So everybody started from like being skeptical, and they just felt like it's have to be integrated. And then some people like a GPI pushed it harder, and the other investor as others, I don't want to put it less, but it becomes more like industry-wide trend to integrate ESG. And then throughout that process, we try to use the size of the fund to negotiate with the asset managers, but even with that, it was very hard. So I always, felt sympathetic to the most of the public pension fund managers. They are either, not big enough